Hello everyone, welcome to our Forex Trading for Beginners live session for today. My name is Leo and I remain your okay. So yesterday we have a little bit of issue in the afternoon session. So I want to retake, what we did yesterday, so that for us that weren't present yesterday, at least we get the chance to do a follow-up. And those of us that attended the afternoon class, I apologize for what happened there yesterday, and we can so that we won't miss steps. I hope you understand. Let's just retake this, so that we'll prepare our mind for the afternoon class, because the afternoon class is going to focus mainly on chart analysis. Okay, so we're going to be placing trade, the fun part of trading. So that is what we're going to be doing in the afternoon class. So for us that didn't attend the morning class for yesterday, this is the topics, few of the topics that we went through in the morning. So we already passed the stage of introduction to forex. Okay, we've passed the stage of the what currencies are, and then the major pairs, the currency pairs, and all of that. So now we are a step ahead rather. So we are in the introduction to the forex chart. Okay, so we are getting into the fun part. I'm just saying this because of those that were not present in the morning session yesterday. Okay, so today I'll be introducing you to the forex chart, the type of charts that we have in the forex chart itself. We have the bullish and the bearish market. I'm sure you've heard about the bullish and the bearish market, so I'm going to give you an insight to what it means. Then when the trader is saying I want to go long in forex trading, what does it mean? When they say I want to go short in forex trading, what does it mean? Then we have the pending order. Okay, so I'll be showing you all of these, what it means. In the afternoon class, I'm going to be placing a pending order for us so that we'll get the, this is just like the theoretical aspect of it. In the afternoon class, I'm going to show you the practical aspect of it. Okay, so how you are going to be placing a pending order. Then what type of analysis are. We have different analysis in the forex market. I'll be introducing you to the analysis. Then in the afternoon class, I'll be showing you how to analyze the market. Okay, so then we are going to be ending our session with the type of analysis that is better for me and you. Okay, the one that I use, I'll be telling you my own personal analysis, the one I love best. Okay, so but before we go into the main business for today, I want to remind you guys about our BtcDana premium signal channel. Okay, so on this channel, I told you we'll be dropping premium signals and analysis, because on this platform we don't just want you to learn how to trade the forex market, we want you to also earn while we are teaching you how to trade yourself. Okay, so please make sure to deposit. Like I said, for you to get into the premium channel, you need to deposit at least $15. Okay, deposit at least $15 in your BtcDana trading app. Then you get into the premium group. You have access to premium signals and market analysis. Okay, and then if you deposit up to $200, you get into the premium group, access to premium signals, market analysis, and more. Then you get the privilege, a one-on-one session with me on Zoom. Okay, so on this Zoom session, you can show me, if you are already a forex trader, but maybe you are still losing, you are still having a negative trades. Okay, you want to scale up your trading level. We can have a one-on-one Zoom session for an hour where we'll be discussing a way further. Okay, so those are the benefits of you depositing on your BtcDana trading application. Okay, so $15 at least, then $200, up to $200 for a master, for you to get access to a one-on-one class with me. So with that said, let's get into the business for today. Now, what is a chart? Okay, I know during our beginner session, I made mention of forex chart in different part of our training. Okay, so chart are the main tool of a technical analysis. In forex, there's what we call an analysis. We'll get to that point, don't worry. There's what we call technical analysis. And before you can do those technical analysis, you need a chart, a forex chart. So there you see the movement of the market, what the market is doing, how the market is moving. Okay, so we use charts to plot a sequence of price, that is price movement, of an asset over a certain duration. Okay, so it is a graphical way of showing how the stock price have performed in the past. So we use the price of past performance to judge what is going to happen, to predict what is going to happen in the future market. Okay, so that is majorly what we do in the forex chart. I hope you all understand this. And in the chart, we have three type of forex chart. Actually, we have the line chart, we have the graph chart, the line chart, we have the bar chart, and then we have the candlestick chart pattern. Okay, so now we have the line chart, like I said, and this is an example of how the line charts looks like. Okay, look at it. It looks like a line, connected by a dot. Okay, so they have a sharp edge that is connecting them together, but it's a line. Okay, so it is the most basic of all forex charts. Okay, it is very basic. Okay, so it's just a line. Look at it. I hope you are seeing this. So it is the most basic of all forex charts. It is created by simply connecting the data point depicting the price, the closing price of a certain period with a line. As you can see, they are all connected with a line. I said we have a sharp connection, a sharp edge of connection around them. Okay, see, so they are visually connection of a line. Okay, this is what a line chart looks like in the forex market. Okay, then we have the bar chart. This is the bar chart. So this is the second type of chart that we have in the forex market. So unlike the line chart, the bar chart not only shows the closing price, but also depicts the opening, high, and low price of a certain period. So the graph is made up of a right and left dash, as you can see. You see, there's a dash here, there's a left dash, and there's a right dash. You see, there's a left dash, there's a a right dash, and then we have a vertical bar. Okay, we have a vertical bar. This is the vertical bar, and then we have the dash around it. Okay, so this dash, they shows the closing and opening price respectively, and then the vertical bar shows the currency low and the high. Okay, so in the forex chart, we have what is called the high and the low of a price. Okay, so that is what our vertical bar, this vertical bar, this is what is showing us, that this is a high and the down part is the low. Okay, so I hope we understand what a bar chart means now. So this is another example of our bar chart. You see, like I said, the high, this is the high. Okay, the above part of it is the high, while the lower part of it is the low. Then now we have the two dash. Okay, this is the right, the left dash, and this is the right dash. Now the right dash is for the closing, while the left dash below is the opening. Okay, this is for a bullish market. Then this is for a bearish market. We have the in any bearish market, we have the opening above, then the closing below. Don't worry, we'll get to that part where I will explain better what the bullish and the bearish market is. Okay, so you understand what a high, um, what a closing and an opening candle is. Then we have the candlestick chart. Now, this is a candlestick. This is what a candlestick chart looks like. Okay, this is my own favorite chart pattern in forex trading. This is what I use to analyze my market. Okay, out of the whole of the three forex charts, you can decide to use any one that you are comfortable with. So like I said at the beginning, I said I'm going to tell you the one that I myself am comfortable with. So this is the one that I'm comfortable with. Okay, so we have the candlestick pattern, and we call those candlesticks. Okay, you see they look like candles, don't they? Okay, they look like candles. Okay, and then we have two type of candlesticks. We have the bearish, and then we have the bullish. I hope you're getting me. We have the bearish, we have the bullish. Now, this bullish, wherever you see the bullish, they are depicting that the market is going up. Okay, so the bullish, they are green, always green in color, while the bearish are always red in color. Okay, so we use this for a buy market, an uptrend. We call it uptrend. It's also a buy market. Then we use this for a sell market. We call it bearish. Okay, I hope you are getting my point. Now, in this candlestick pattern, we have the opening and the closing price. Okay, so the opening price for a bullish market is below. When a candle opens below, it goes up, it goes up, then it closes above. It makes it a bullish market, an uptrend. Okay, because it will be forming a candle with a low opening and a high closing. Okay, so that is an example of bullish and the bearish market in candlestick chart pattern. Okay, so and then we have this short stick here. Okay, we have the body and we have the short stick. Look at this. If you take a look at this very well, it looks like a lollipop. Okay, lollipop, the one you lick. So this one looks like the stick of a lollipop. Okay, so this green here, we call it the body. Okay, we call the green part the body, and then the stick, the way I like to call it, is called shadow or wick. Okay, so when you see a candlestick, when you see a candlestick, what I want you to take note is the stick is called the shadow in forex. Then the body part, you see some candles that are actually filled up. Okay, they have no stick, they have no shadow. Okay, they can be filled up. So every price action, the way this is forming right now, means something in the forex market. So like I said, in the afternoon class, I'll be showing you what this type of candle, what it means. Every candle here has its own significance. Okay, it has its own value. It's showing you an information of what is going to happen next in the market. Okay, so that is all for our candlestick chart pattern. So this is another example of a candlestick pattern. Okay, so the candlestick is very popular among the trading community. Okay, the chart provide visual insight to current market psychology. Just as I've explained, they provide you a better way of analyzing the market because every candle means something. Okay, and I already explained to us that the lower part, it opens from the lower part and then closes above. That is for a bullish market. Then in a bearish market, it opens above and then closes below. Okay, the bullish market is always in green color, while the bearish market is always in red color. Okay, so I hope we get that. Then we have the bullish and the bearish market in forex trading. Just as I'm sure if you are following me, you've seen that you've had me mentioning the bullish and the bearish market right from the beginning of this course. Okay, so the term bull is short for bullish. Okay, and the term bear, you hear me saying bull sometimes, you hear me saying bear sometimes. So anytime I say bull, what I mean is bullish, and anytime I say bear, what I mean is bearish. And they are often used to describe how the overall financial market is performing in general. Okay, so like I've said in this slide, every candle here means something. Okay, so look at this now. This is from here up until here. What is it telling us? It's telling us this market is going up. Okay, and look from here to here. As you can see, this is higher and this is lower. Okay, so from here to this point, it's telling us this market is coming down until it changed direction here. Okay, so that is what the bullish and the bearish market is for. That is, they show us the performance of the market in general, whether there's an appreciation or a depreciation in the market. Okay, so there's no way you want to analyze your market without the bearish and the bullish and the bearish forex chart. Okay, so the bullish market is used to describe condition where market is rising, and the bearish market is the one where market is going down. I'm sure you've heard me say this a lot of time. Okay, those are just the differences between the bullish and the bearish market. The bullish market is used to describe the condition where the market is rising. That is, we are going up. We call that uptrend in the forex market. Then when the market is coming down, it is bearish. We say, ah, wow, this market is bearish. Okay, you want to give an information to your co-forex trader. Okay, you say, oh, Ola, check your chart. Your chart is bearish. Okay, so you are telling Ola that his chart is going down. Okay, so that is our bullish and bearish market. So also in our bullish and bearish market trend, also the bear and bull trend also determine which currency is stronger and which is not. Okay, with the example I have made, you see some candles forming and they are very small, and then you see some that is very big. Okay, let me show you the chart again. Okay, look at this. As you can see now, there are a lot of green candles. The red candles are not so much. Well, so what this market is telling us now is the market is in uptrend. Okay, so you can just take note of it. You can even take screenshot for a better understanding so that you can reminisce over it later. Okay, so that is what I mean here by bull and bear trends also determine which currency is stronger and which is not. So by correctly understanding the market trend, a trader can make a proper decision of how to manage risk and gain a better understanding of what is best to enter and exit from your trade. Okay, so um, that is just the simple explanation for the bullish and the bearish market. Okay, so they make us know which currency is stronger and which is not. Which market, which market do we want to trade presently? Is it the bullish? Is it going up or is it going down? Okay, and then um, we have long in forex trading. We have what we call a long in forex trading. Okay, so let me explain this in a layman understanding. When they say somebody is going long in the trading, okay, I say, let's go long, guys. We are going long. What we mean by long is we are going to buy. We want to buy a currency pair. Okay, let's say we want to. Okay, maybe I'm giving you a signal now. I'm saying GBP USD is going up. What I mean is is going long. What I mean is let's place a buy order. Let's look for a buy opportunity in the GBP USD. Okay. So why you purchase buy a currency pair, it is called going long. When a currency pair is long, the first currency is indicating you are bullish, while the second is sold short. Okay, don't worry, you don't need to pay too much attention to this. All what you need to pay attention to is that in long we are buying. Okay, when I say a market is going long, it means we are in a buying trend. We are in a buying market. Okay, so the opposite is going short. So what is a short? Without even me defining this for you now, I think you should be able to know what a long is in the forex market. Okay, so when you say we want to go short, what it means is we want to sell. Okay, we want to sell the market. Okay, so with the example I've made for the first one, GBP USD, it was buying the other time. Now we want to go short. What does it mean? It means we want to sell. Okay, so that is what going long and going short is in the forex market. So moving on, we have the pending order. Now, this pending order, I'm going to introduce you to the pending order, the practical part of pending order in the later section, which is the afternoon section. Okay, but let me just make a simple explanation for you here. So a pending order in any trade is an order that is not yet executed, okay, not yet becoming a trade. So generally, while trading, we place the order with a limit, which means you place the order, but it's not yet executed. I hope you understand my English. Okay, so you are placing the order. You are saying, when this market gets to this point, oh, it's going to buy or it's going to sell. Okay, you haven't. It's just like when they say somebody is setting a timer for something. Okay, maybe you set a timer. I want to wake up and go to work around so time. So it is exactly for pending orders. You want to set a timer. You want to set a price tag at a particular point of price, that when the market gets to this point, it's going to start selling or it's going to start buying. Okay, and your market will not get executed until it gets to that point. Or have you seen a situation where you set your alarm to 6 a.m. in the morning and then it starts ringing around 12 p.m.? It's not possible unless you made a mistake. Okay, so I hope you are getting this. Okay, so that is what pending order is all about. And then under the pending order, we have limit, we have buy limit, and then we have what we call the buy stop. We have buy limit, we have buy stop, we have sell limit, and we have a sell stop. Now, the buy limit. A buy limit is a pending order to buy a currency at a low price. Okay, so whatever price trader wants to buy than the current one is what we call a buy limit. So take for example, your market is around here. Let's say your market is around here. Let me just change the color. Okay, so your market is around here. Okay, this is for buy limit. Your market is around here. Let's say it already come this way. It's around here. Maybe your market broke out. Okay, so your market is around here, and then you want it to go back into this zone and then go higher up. Okay, now what we are going to set here is a buy limit, that when this market that is going this way, when it comes back to this price, we want to place a buy order. I hope you are getting my point. I hope you can you see this example. Okay, so this is our price. Okay, it's going this way. Then maybe you miss the opportunity entering from here, or you are in a condition where you saw the market is going to come back to this price, is going to come back to this price, then you want to place a buy limit around here. Okay, that when your price goes back, okay, comes back into this price, you want to start buying. Okay, so that is an example of buy limit, and it's not going to trigger unless the market comes back to this point. Okay, so that is what we mean by buy limit. Now we have buy stop. What this buy stop means is that, assuming, okay, let's take this example again. This market is has already broken out here. Okay, it's around this area. Okay, so now we already missed the opportunity of going placing a buy order from this point. Okay, so the market is around here already. Then maybe there's a price point you want the market to get to, particularly. Okay, it's not just the market is going up, is going up. There's a price. There's something you are seeing. Okay, maybe you are speculating that when the price gets to that point, it's going to go up further. It's going to go higher up. Okay, so now buy stop comes in when you want to place a buy order on already buying market. Okay, the market is going up. You want to set your buy stop around this area that when the price moves up to this point, is going to continue to buy. You know, in buy limit, I said when the price, when the market, okay, when the market goes a little bit up, then comes back into our price, which is the one below, before it starts to buy again. Why the buy stop is an already uptrend, a market that is already uptrend in uptrend, okay? Then you want to set the price stop, a buy stop at a particular point. You want the market to get to that point and continue to go up, okay? So a buy stop is a pending order to buy a currency at a price, whether whatever price trader wants to execute than the current one. Okay, now this is our current price. This is our current price, but we want our market to get executed when it gets to this point. Okay, so that is what we mean by a buy stop. Then we have the sell limit and the sell stop. So the sell limit and the sell stop is just it's basically an opposite of what we discussed here in the buy limit and buy stop. Okay, so a sell limit. Let me use this example again. Okay, okay. So a sell limit is okay. Now, this is an example of our sell limit. Our price is here. Okay, our price is already here. It's selling already. Okay, so now we want our market to go back into our price. Okay, maybe it just broke out. Maybe there's a support here earlier, then it broke it out. You know, we want to turn you want to turn the resistance into a support. Okay, so you might not understand the word support and resistance now, but don't worry, we'll get there. Let me just use the basic time. Maybe the market already came down to this level, okay? And again, you miss the opportunity of getting into the market around here, or you know that the market is going to go back into this price before it start to go down again. So you want to place your sell limit around this area, okay? You want to place your sell limit around this area so that when this price comes back into this point, it sells. Okay, so a sell limit is a pending order to sell a currency pair at a higher price. Okay, a higher price. Our market is already here. It's already selling to this point. It's sold to this point already. We want it to go back to this higher price again before it continues to sell. Okay, so that is what sell limit is all about. Then we have the sell stop. Okay, so now the sell stop is the opposite for a buy stop. Okay, so our sell stop is a pending order to sell a currency pair at a lower price. Okay, so now this is a lower price because the market is already coming low. It's going low. Okay, you see, we are going low. We are going low. It already broke out. It's already going down. But what we want to do now is there's a particular price. Okay, there's a point in our market we want to start selling. The market is still it has started selling. No, the market is selling already, but I'm not ready to sell. Okay, so I want the price to get to a certain level. I want it to get to a certain level before I start selling. Now, when this market gets to that point, you sell a sell stop. You set a sell stop on that point. Then when it gets there, it executes your trade. Okay, so that is what a sell stop means. Okay, so I hope we understand what a buy limit, a buy stop, a sell limit, and a sell stop means now. Okay, so when we want to place a pending order, we know how to set our buy limit, buy stop, or a sell limit and a sell stop. Okay, so if you understand, then let's move ahead. Now, like I said, we have what we call analysis in the forex market, and this analysis is a way of telling the direction of the market. Okay, before we can place any trade. Okay, so we have three type of forex analysis used in the market movement forecasting. Okay, so we have the fundamental analysis, we have the technical analysis, and then we have the sentiment analysis. Okay, so the fundamental analysis deals more with news. Okay, the fundamental analysis deals more with the social economy and political factor that is affecting a currency supply and demand. Okay, you want to look at the news, the international news, and see what is going on in the currency pair that you love trading the most. Say you love trading the US currency pair. Okay, so you want to know what is going on in the US economy. Uh, do they have a short in unemployment rate? Is their unemployment rate high? Okay, so those are factors that affect a currency pair. Because they affect economy, so it definitely basically affect their currency pairs. Okay, so that is what fundamental analysis is all about. You want to look at the news to get an information of what is going on. Then you have an insight to what is going to happen to their currency. Okay, so and then we have the technical analysis. Now, the technical analysis is the fun part of trading. Like I said from the beginning, is the fun part of trading. It is where you make your analysis in the forex chart. I've introduced you to the forex chart earlier. So, and I said we make technical analysis on the forex chart. Okay, so it is the study of price and volume movement. We have in the technical analysis, there's what we call the uptrend. Okay, I'm sure I've mentioned this before. We have the uptrend, which we call the bullish. Okay, so the bullish pattern is called uptrend, while the bearish pattern is called the downtrend. And then we have a flat trend. That is when the market is going sideways. There's no way to tell if the market is going to go up or is going to come down. So it's going sideways. There's no decision. Okay, so that is what um, a flat trend is all about, and that is for technical analysis. Before you can make your technical analysis, you need a chart. Okay, then we have the sentiment analysis. Now, this sentiment analysis deals more with now sentiment. When somebody is sentiment about something. Okay, so let's say it deals a lot more with your mind. Okay, your psychology, what you are thinking, how you are reasoning. Okay, so when you are making a sentiment analysis, you is what you are thinking in your mind. This market, I think this market is going to come down with all the analysis that I've done. Okay, the way I'm seeing this market right now, with my fundamental analysis and my technical analysis, I think this market is going to go up. That is the sentimental part of the analysis. Okay, you see, before you can become a professional forex trader, you need all three of these. Okay, you need all three of these because you can't do without the fundamental analysis. You need to check your news so that you get the insight of what is going on in the economy. Okay, then there's a technical analysis, which is the one you do on your chart so that you know okay, the fundamental analysis that I've done now, the market seems to be good, the economy seems to be good. I think they will be up for a while. Okay, they will be going up for a while. They are not coming down for now. Their economy is in a standard position right now. Okay, then the technical analysis is you don't just jump into the market because you already saw the fundamental part of the analysis. You know the economy is good. You don't just jump into the market. Okay, so you want to place your order in a place that is very safe. Okay, so that is where the technical analysis comes in. Okay, so because like I said, it is the study of price and volume movement. The price is always jumping around. It's always jumping around, even though it's going up. There's no straight market. Okay, so when we get to the part where I'll be showing you the forex chart, you see what I'm talking about. There's there's no straight line in a forex chart. It's always going zigzag. Okay, so that is where technical analysis is very important, because you need to know exactly the point where you are supposed to get in from. Okay, then the sentimental analysis is also very important, but it's not as important as the technical analysis and the fundamental analysis. Okay, it is not as, because you can easily make your analysis with the technical analysis and fundamental analysis. You can easily place your order with just with those two analyses alone. The sentimental part is, let me say, some people just love being sentimental, when it comes to analysis. I don't love being sentimental. When I have my technical for the technical analysis and my fundamental analysis right, I place my trade. Okay, it doesn't matter what I think. So that is all for our forex analysis. Then under the looking at the technical analysis, you see this fundamental analysis. I would have loved to introduce you more to it, but if you want me to show you the fundamental analysis, I think I'm going to put this in our BTC Dana. So I'm going to put it here. Okay. So if you deposit up to $200 in your BTC Dana forex trading app, okay, you have a one-on-one live session with me. Okay, there I'll be introducing you to how I make my own fundamental analysis. Okay, how I see my news, where I get my news from. Okay, so but on this live session, we are going to be focusing more on the technical aspect of our analysis. Okay, the uptrend, the downtrend, and the flat trend. Okay, so under these trends, we have what we call the support and resistance. Okay, we have the support and the resistance, which can also be your demand and supply zone. So support or demand, if you say demand, is the same thing, you are saying the same thing as a support zone. Okay, and when you say resistance, it's also the same as supply. So you hear me many times saying calling support or demand, I'm saying the same thing. Okay, or when you hear me saying resistance or supply, I'm saying the same thing. Okay, support occurs where a downtrend is expected to pause due to a concentration of demand. Okay, so what it means is, due to the concentration of the demand is, maybe there are people around the demand zone, that are demanding, they want to buy. Okay, they are waiting for the market, they are waiting for the price to get to that point, because the market has been selling for so long. So they are waiting in that particular position. They are waiting in that price. They are waiting for the market to get to that point, and they start to buy. Okay, so that is what we mean by a downtrend is expected to pause due to a concentration of demand. The people that want to buy, they start to take over the market when the downtrend gets to that particular price point. Okay, then we have the resistance. The resistance occur where an uptrend is expected to pause temporarily due to a concentration of supply. Okay, so it's just an opposite of what we've explained here. Okay, so in the resistance market, an uptrend is expected to make a temporary pause. Now this temporary pause is, in the resistance market, in the resistance is a supply market. So this resistance now, we have the sellers around that zone. I said in the demand, we have, in the support, we have the buyers. Okay, so here we are having the sellers. The market has been buying for long. The sellers are waiting in the resistance zone. When the market gets to that point, they want to start selling from that price point. Okay, but don't worry, I'm going to show you the practical aspect of the support and resistance. Okay, so that you get a better understanding of it. But for now, let's just focus on the explanation. Okay, so in our afternoon class, I'm going to introduce you to the forex chart. Okay, so on the forex chart, we are going to be making market analysis using the support and resistance that we've talked about. And again, we have what we call a trend line in the forex market. Now, this trend line is also like the support and resistance, okay, but it is not in a straight line, okay. So is don't worry. In the afternoon, I think our next session will be around 12:30 p.m. Nigerian time. So in the afternoon class, I'm going to show you what a trend line is, how to draw a trend line, what support and resistance is, and how to make the support and resistance. Okay, just a minute, please. Okay, so before we move on, you want to give us few moments for a question and answer. Okay, so if you have any question pertaining to what we've discussed, please feel free to ask. Okay, if there's any question at all, this is your chance to start asking. Just few minutes for our question and answer. Okay, okay, okay. So if you don't have any question pertaining to this topic, now let me ask you: do you know how to make deposit on BtcDana app? Okay. So in case you don't know, let me guide you through the process of depositing. Okay. So log into your BtcDana app. Okay. So when you are in the app, you see a screen like this will pop up. Let me see if I can make this wilder for you guys to see. Okay. Okay. So when you get into your BtcDana app, you see you see this deposit, you click on it. Okay. So after clicking on the deposit, it will take you straight to this page, okay, where it will be showing you bank transfer. Okay, so for Nigerians, this is for you. Okay, you transfer using your bank, okay, using your digital bank. Okay, so when you click on the bank transfer, it's going to bring you this page where you'll be able to enter the amount that you want to deposit. Okay, so they already have a static amount here, but you can click order and enter amount that you wish to deposit in the app. Okay, so now after clicking on it, it's going to bring you to this page. So you click the deposit. Okay, when you click the deposit, it's going to bring you to this page. Now please note, the deposit information is valid for one time only. Please do not transfer multiple times, or else your deposit might fail. So what this means is that I figure that there are some of us that when we want to deposit, we love to keep our account details, the one that was generated after clicking on deposit. The account deposit generated is just for 30 minutes use. Okay, please don't keep it. After depositing, after this deposit, If you want to make another deposit, maybe you want to make another, go and generate another account details. Go back to our first process. Okay, go into the deposit, click on bank transfer again, enter the amount you wish to deposit now, which is your new deposit. Enter it. Then when you click deposit, it's going to bring you back to this page again. We've made the first deposit already. This is for the second deposit. So always repeat the same process for any new deposit that you want to make. Okay, I hope you guys are getting my point. So if you take a wrong step in your deposit is going to fail. Okay, so when you enter the amount you want to deposit here, click on the deposit. It's going to bring you to this page. Now, while you are on this page, it shows this warning to you. Oh, I've explained the warning, what it means. Okay, so click on the deposit and it's going to bring you to this page showing you the amount. Okay, the amount in naira that you want to deposit, and then it will give you the account details that you are supposed to send the money into. Okay, so this is the account details, this is the account number, this is the account name. It's a Wema Bank, or if you are using a Wema Alert. If you have a Wema Bank or a Wema Alert, it's all good. If you don't have, you can use your OPay or any other digital bank. Okay, and this is the account name. Okay, so this is what it's going to display for you. So after I display this, copy this account details, enter it into your digital payment platform. It should show this name for confirmation. Okay, it should show this name. Make sure you select Wema Bank. The bank you are transferring to is Wema. Okay, if you show this name, then after you've transferred the money into this account, come back here and click I've made the payment. Okay, so please, let's be guided. Remember what I said here. Any account generated here, this account that is generated for you is for 30 minutes use only. Okay, after your deposit, don't save these account details. Anytime you want to make another deposit, always go back to the first step. Go back to the first step again, repeat everything that we've talked about. Repeat the deposit process. Click on the deposit. It will take you to this point. Enter the amount you want to deposit. Okay, it will get you here. It will get you to this point. Then here, where to start showing you the account number, the account name, and the bank name. After transferring the money into this account details, then come back here and click on I have made the payment. And then you start to see the amount you deposited in your BtcDana app. Okay, so okay guys, we are coming to the end of our live session for this morning. But before we go, I want to remind you guys again about our BtcDana Premium Signal channel. Okay, so like I said, all you need to do is just deposit $15 into your trading account, BtcDana trading account. Okay, deposit at least $15 to get you into the group. Now, when you get into the group, you have access to premium signals, market report, and more. Okay, so there I'll be sharing market insights. We'll be taking trades, so we'll be sharing the result of our trade. Imagine depositing $15 now, and maybe before the end of the day, you are able to make around $10 plus $10. That is $25, isn't it? Okay, so we share market insight. I tell you more about the trading signal. I show you trading signals and tell you more about market report, what the market is doing at that particular moment. Okay, so I'm giving you a signal with a take profit and a stop loss. Then if you deposit up to $200, you get into the premium group, access to premium signal, market report, and more. Then you get to have a private class session with me, a 1-hour private class session. Okay, so on this session, you can decide to share with me whatever it is that you are lagging on. Maybe you are already a forex trader. Maybe you've learned forex trading before, but you don't know. Maybe placing your order has been very hard, or you keep getting a negative result anytime you place an order. Okay, so we can share insight. We can discuss. It might be your psychology. Okay, like I said in the course, the sentimental part of trading. So it could be your sentiment. Okay, it could be your sentimental analysis. So we can discuss this on our live session, and I even get to show you the fundamental analysis. How you can easily go to check your fundamental analysis, the website that you can see, get your the places you can get your fundamental analysis, your market report. Okay, so I will show you all of these in the master deposit. That is if you deposit up to $200. Okay, so now if there's nothing more to say, I think we've come to the end of our morning live session. Okay, so I'll see you guys around noon, which is around 12:30 p.m. Nigerian time. So get your account prepared because we'll definitely take a trip today. I promise you guys. Okay, so fund your account with at least $15 so that in the afternoon we get to place a trade together. And I promise you it's going to be profitable. Okay, so $15, you calculate them. If you deposit up to $15 now, maybe before tomorrow, your money might have even doubled. Okay. Okay, guys. So please don't forget the warning I gave here. Okay, this account details is only valid for 30 minutes. After 30 minutes, do not send to this account details again. Go back to the first process. Repeat every process step by step again for depositing. Okay, do not save account details generated. Hey, guys, I'm warning you, please. So I'm telling you now so that you not come back here and be saying, I deposit money and I didn't see it. Okay, so any account that is generated here, it lasts for just 30 minutes. After 30 minutes, you can't use it again. Okay, so in fact, if you want to deposit again, what I do is anytime I want to deposit personally, anytime I want to make a deposit, once I use these details, if I want to make another deposit, I go back and repeat the process again. So I start from the beginning. I click on the deposit again, go to bank transfer, enter the numeration, which is the amount I want to deposit. Okay, so it gets me to this page where it will give me another account details. Okay, it will give me account details, the bank name, and then the account number. Okay, so after sending the amount I want to deposit into this account details, I come back here and click on I have made the payment. Okay, so that's it, guys. And please don't forget to deposit before the afternoon class. Like I said, we are going to start analyzing the market, and we are going to place a profitable trade. Okay, so please deposit at least $15. If you don't deposit up to $15, you will not be qualified to get into the premium group. Let's be guided, please. Deposit at least $15 to get into the premium group. Then you have access to the premium signal, okay, and the market report. And then as for the master, if you want to get a one-on-one session with me, deposit up to $200, okay, and I tell you how to read the market fundamentally. So I hope we are getting the point. All right, guys. If there's nothing more, I'd like to end my live session here with you guys now. I'll see you guys in the afternoon. So enjoy the rest of the day. See you guys later. Bye. Okay, sorry guys. I just saw this message from someone now. Sorry. It won't be fair because I asked the question. It won't be fair if I didn't answer it before going off. Okay. So somebody said, he said, how can I determine when the market is about to buy or sell? Okay. So before you can determine if the market is going to buy or sell, yeah, you need to make a technical analysis. Okay, and that is what I said we are going to be doing in the afternoon. So that is why I said fund your account so that in the afternoon I will show you what the technical analysis is all about. Okay, we have the support and resistance, and then we have the trend line. Okay, so in the afternoon class, make sure you deposit your deposit money. You fund your BtcDana app. Okay, so when you fund your account in the afternoon, I'm going to make an analysis, and I'll be explaining how that analysis works. Okay, so for you to ask, how do you know if the market is going to sell or is going to buy? In the afternoon class, you are going to see how everything works. Okay, so if there's no more question, I think we are good to go. Or if you have any other question, or maybe you asked me a question I didn't answer earlier, please you can actually retype it now. So let me answer before I close this session. I hope we all know how to deposit on BtcDana app. Okay. Okay, on our live stream, there's even a place where you can deposit. Okay, so click on the deposit link on the chat room. So it will take you straight to where you can deposit. Okay, so click on the deposit link in the chat room, and it will take you straight to this point. Okay, it will take you straight here. Then from here, you can click on bank transfer, then enter the amount you wish to enter. Okay, the amount you wish to deposit in your account. Okay. 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 I know some of us are already an intermediary trader here, and we get confused by what stop out is, you know. So we don't really understand the concept of stop out. Now, a stop out is a way that a broker, tries to protect your capital. Okay. So let's say you are having $100 in your account right now. BtcDana has a stop out of 30%. Okay, so when your account goes below that percentage, they are going to start closing your trades. Okay, so that is basically what a stop out means. Okay, so because I know though I didn't put it on this slide, but I just figured that I had to explain it to you guys. Because in the afternoon class we might not have the opportunity, and I know some of us are wondering, what is a stop out? Why am I getting stopped out? Okay, so that is basically what a stop out means. So it's a way of them protecting your balance. Okay, they don't want you to lose all of your funds. So that is why it is very important when you are placing a trade, make sure you use a micro lot, okay, a lot size that is suitable for your account. Okay, you have $100 account, you don't want to start trading a one lot size. That is too big. Okay, so trading is all about psychology. Trading is all about um, your reasoning. Okay, how you want to do things. You don't want to be too forward. You want to look at things the way they are supposed to be. That is what trading is all about. So for you to become a profitable forex trader, you need to pay attention to details. Okay, don't worry. In the afternoon class, I'm going to share more information and more details about forex analysis, and even the stop out. If you still don't understand it by then, I'm going to make a better explanation using a slide. Okay, so if there's nothing more right now, I think we are good. Or if you have any other question, I can still give you like 5 minutes, 5 minutes more. Okay, so that if you have any question, you can ask me before I close the live session. Okay, so we have 5 minutes. Come on, guys, ask your question. Ask your question. Let's see where you are lagging. If there's anything you don't understand, please throw it at me. Let me answer it for you. Okay, so that is what I'm here for. I'm here to help you guys out. So I know things are not really easy right now. So we need we need to know this so that we can start making money. Okay. Right now, you don't even need to be an expert before you can start making money. Just deposit on your account. Deposit on your account. Deposit at least $15. I get you into the premium signal group, and then you get to start making money even while you are learning. Okay. It doesn't matter if you don't have up to $200. You can just deposit the $15 and take the signals. The $200 is for you to have a private session with me, a 1 hour private session. Okay, private class. I'm still waiting, guys. For you that wants to deposit, I hope I've already explained it. Okay, click on the link in the chat room. Yeah, that place you are chatting. Yes, click on that link. Click on the deposit. Okay, it will take you straight to this point. Okay, it will take you to bank transfer. Click on the bank transfer, and it's going to take you here to where you are going to enter your numeration, which is the amount you want to deposit. Okay, and also remember, this account that is going to be generated for you lasts only for 30 minutes. So do not save this account details. Okay, whenever you want to make another transfer, another deposit, always repeat the steps from the beginning. Okay. Oh yeah, guys, deposit. Deposit $15. Let's start making money together. Stop playing. Oh yeah, deposit. When you deposit up to $15, just tell us you've deposited up to $15, okay? So in the afternoon, we start making money together. Okay. Okay. I think I've given us enough time already. So if there's nothing else, I'd like to end this live session now. So guys, let's meet in the afternoon around 12:30 p.m. Nigerian time. Okay. So there we'll be discussing more about the forex analysis, how to plot our support and resistance and our trend line. Okay. And then possibly we'll be taking a live trade. Okay. So if there's nothing more, let's end this session right here. All right, guys. I'll see you guys in the afternoon. Enjoy the rest of your day. Okay. Bye.